Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Thursday, and we're sitting here at about, 6:35 p.m. Central Time, and we are on October 20th, 2022. Halloween coming, and believe it or not, you got to start thinking about Thanksgiving. Now, the good news is the weather in Chicago is going to get nicer. I'm going to be able to go outside for the next 3 days. It's going to be near 70. And what do you have to do? You got to cut down the foliage. You got to take in all the umbrellas and everything. Because in Chicago, folks, come November, it can be anything. I mean, it gets pretty wild very fast. So things like that. What's also wild, we saw today the resignation of Prime Minister Truss, 44 days in office. That's a new record. And as I said, when she came out and she was copying policies like President Erdogan of Turkey, I said, you can't do this. It's not going to work. She's cutting taxes and she's raising spending. Where does the money come from? This is what Erdogan does. He lowers, as everybody else in the world raises bank interest rates to fight inflation. He keeps lowering it, keeps spending. Inflation's out of control. People there, in order to keep up with inflation, they buy into the world's best performing stock market. You're going, I'm crazy. No, I'm not. It's their stock market because it's like putting money away. As the inflation runs, you buy goods from companies that make Kleenex and everything there. It runs up and you're keeping up to some degree with the craziness that is going on. I know it's nuts. Go on Google. You'll read about it. Okay. But this is all about metals. And in the metal markets, the headwinds that this market are facing, they're severe. They're the bonds and the notes, which just keep climbing. They're now holding nicely over 4% from the 2, the 5, and the 10. Do you know what mortgage rates are? The 30-year fix today. Get ready. Sit down. 7.37%. Yeah, that's a lot of money. I mean, just think about that. So are people buying at that? They're not. They're pricing it where you can't buy it. Could they go double digits? Why not? I've seen it before. It can happen. Why not? There's no top to these type of things. What happens is the banks come out with new creative products. They'll come out with a different type of arm, the adjustable rate. They'll be shorter. They'll be tied to something else. They know what they're doing. They'll find a way to get you in, and then as the rates go down, you come in and you refinance again, and they make more money on that. And there's just games that are played. My advantage is I have seen everything. Everything. I've been a broker since 1969. I've been through all these real estate cycles. I remember when I bought my place in Florida, and I lived in Chicago. I had 2 homes, and I waited for what was the inevitable crash in my mind. It came. I bought. I did very well, and then I sold out again into the craziness. Okay. So as I look at what's going on here in the gold, silver, they're down. Copper's hard because you're still counting, is China going to do anything with the property market and infrastructure plays? And because they consume 50% of the world's copper, it's a dangerous one to trade till we get a better handle on what they're going to do. As we take a look at the gold chart, there's nothing bullish on this chart. It just keeps working its way down. The good news is it's in the area that I was looking for. If you'll recall, we were talking the 1625 area. Would the market be able to hold a retest of it? I still don't know. What I can tell you is the trend is down, lower highs, lower lows. You're in the process of retesting that. You're well under the 18-day average, which unfortunately is still over the last rally high of 1674.30. So a test of it would be a signal this wave ended, not be a new sell signal. That can change if the number starts falling more. And the support, well, it's the lower Bollinger Band if it can be hit. And that's 17.80. And I think it would be an important number because the market is so oversold. Now, where this market gets into another level of danger, it can get even more bearish, is what I'm saying, is if the slow stochastic readings decide to embed. So if you get several days or more, and I teach that in my enhanced Bollinger Band course of embedding, forget it. You get aggressive on the short side and just keep looking for it to go down, to crack the 1600 level, and then we'd be talking about my new objectives. When I look at the gold-silver ratio, when the market is trading over the 18-day moving average of closes, it means that silver is actually weaker than gold. You need more ounces of silver, the higher the number, to get 1 ounce of gold. When you look at the silver chart, number one, oversold. Both numbers not yet under 20, but they're getting there, but you have to do it more than one time. Number two, the lower highs, lower lows. If the market breaks down, that's an if. It's oversold. I don't think you attract a lot of new selling in gold or silver oversold. Embedded's different when you get that pattern. But maybe you get down to the 1753 level. We'll have to wait and see. What about copper? Well, when you hit a lower Bollinger Band, and I just want to make this so important to everybody, that is where the pros take money off the table. They did it there. I think they did it here. I think they did it there. That's what they do. You don't need the last part. It's like saying, hey, I've eaten the best part of that steak. Yeah, I realize I can't get all the rest of the meat in me. It doesn't matter. Leave that for the other people. Well, that's basically what it is. They're saying, I'm oversold. That's it. You guys can make it more than that. That's great. I'll take another look if you do. In the platinum, you're not going anywhere. You're stuck just either side of this 18-day average, staying away from upper and lower Bollinger Bands on top of that. When you got to the lower Bollinger Bands right here in the palladium, you just went flat. Now, if we go back to just yesterday, because I said this to you, I said, if we get a rally, look for the first resistance now to be the 100-day average because the market got under that. Well, today you come up and notice where the market stopped, basically there. If the market wants to say, aha, I want to do more, then you're probably going back to the 18-day average and the 200-day average of closes. Something else happened today. Let's come back one more time. You broke the pattern of lower highs, lower lows. So I have every reason as a chartist to just say, easy money's over, get out of the market, go to the sideline, look at something else. And that would be my attitude on it. Now in the dollar index, you're still just caught in the sideways action. This market's waiting. Earnings don't impact that. That's the stock market. What this market's waiting on is we're getting closer to what and this is going to be next week, what the European Central Bank's going to do. Then our meeting, November 2nd. What is our Fed going to say? How bearish are they going to be in the meeting? What are we going to hear from the Fed as the chair as he comes out and he talks about how upset he is, because I'm hearing that from others, how upset they are that they're not seeing these rates have yet broken the back of the inflation number. And that's the message that you're hearing. Now, that could change in November after the meeting as we get the new CPI data, jobs report, all that type of information. But you're not there yet. So what I rely on right now are where the Bollinger Bands are going, up, down, sideways, what they mean to me right here, how to go to the sidelines if they're hit, and how to press the trade if they're hit, and you have the embedded reading. Learn this. It's right in front of you. I'm talking about it daily. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.